Investing for Parents with Teens, your guide to financial success. This one's for all the parents out there who are juggling like a million things at once, including trying to raise financially savvy teenagers. Picture this. Your teenager is scrolling social media, probably laughing at memes while you're over here trying to figure out how to fund college, vacations, and a retirement where you're not working part-time at a coffee shop. Sound familiar? Don't stress. Look, I get it. Managing money while also managing a teenager? It's like trying to herd cats, right? But here's the deal. Investing isn't just for Wall Street hotshots or people with trust funds. It's for everyone, especially parents who want to build a better future for themselves and their kids. Today, I'm sharing simple but powerful strategies to help you start investing, even if money feels tight and life is chaotic. Stick with me, and you'll leave feeling like the financial ninja parent you are. First things first, we gotta figure out what we're actually aiming for, right? Because financial success, that's a pretty broad term. So grab a notebook or open up the Notes app on your phone, whatever works for you, and let's get specific. Are you trying to build a college fund for your kid? Because let me tell you, college costs are no joke these days. It's like they're raising tuition every time you blink. So write down the question, how much do I need to put aside each month to reach that goal? Next up, retirement. Yeah, I know it seems like it's forever away, but trust me, it sneaks up on you faster than you think. And the last thing you want is to be stuck working well into your golden years because you didn't plan ahead. So write down the question, how much do I need to be putting aside for my own retirement? And hey, life isn't all about work and no play, right? Maybe you want to take that epic family vacation, the one you've been promising your kids forever. Or maybe you're dreaming of finally buying that vacation home. Write those goals down too. Now here's the thing. Don't just write down vague ideas. Get specific. Assign dollar amounts to each goal and give yourself a realistic timeline. Trust me, this makes your financial journey feel less overwhelming and more actionable. Oh, and here's a pro tip when it comes to college savings. Make it a team effort. Sit down with your teen and discuss scholarships, grants, or part-time jobs they could take on. This teaches them responsibility while taking some pressure off your wallet. And hey, if they push back, remind them that ramen college is a very real thing. Okay, let's talk investing. Now, I know what you're thinking. I'm not some Wall Street tycoon. I don't have thousands of dollars lying around to invest. And you know what? That's totally fine. You don't need a ton of money to get started. Seriously, even if you can only swing $50 a month, that's still a huge win. Because the key here is consistency and time. You see, thanks to the magic of compound interest, your money starts making more money. It's like a snowball effect, but instead of snow, it's your money growing exponentially. Here's how it works. Let's say you invest $100 and it earns a 10% return. Now you have $110, but the next year, that $110 earns you another 10%. So you're up to $121. See how that works? Your money is making money on top of the money it already made. It's basically free money if you give it time. So where do you start? Index funds are your new best friend. Think of them like a diversified basket of stocks that spread your investment across the entire market. It's like a low-maintenance, set-it-and-forget-it way to invest. And look, I know what you're thinking. This all sounds way too complicated. But here's the deal. It doesn't have to be. There are tons of apps and robo-advisors out there that basically automate everything for you. They do all the heavy lifting so you can focus on more important things, like convincing your teen to clean their room. Speaking of things that might seem impossible, let's talk about finding the money to invest. I know budgets are tight, but I guarantee you there are hidden opportunities lurking in your spending. Cancel those unused subscriptions, downgrade your phone plan. Do you really need unlimited hotspot? Or swap takeout nights for home-cooked meals. Every little bit helps. Raising money smart teens. Get them invested, literally. All right, parents, it's time to bring in the teenagers because let's be real, they're the ones who are going to be inheriting this whole financial landscape. Plus, getting them involved early on can actually make your life a whole lot easier in the long run. Now, here's the secret. Most teens actually love learning about money, especially when it's tied to something they want, like their first car, a gaming console, or even a future business idea. So use that to your advantage. Start by showing them the ropes of budgeting. Give them an allowance or help them manage their part-time job income. Once they've mastered the basics, introduce the concept of investing. Did you know you can actually open a custodial Roth IRA for your teen if they're earning money? It's a fantastic way to let their savings grow tax-free while teaching them the value of long-term planning. Plus, the earlier they start, the more time they have to benefit from that sweet, sweet compound interest. Imagine this: your teen sitting down with you discussing their investment portfolio instead of glued to their phone. Okay, maybe that's a bit of a stretch, but you get the idea. The point is, by involving them in financial decisions, you're not just teaching them about money, you're teaching them valuable life skills, responsibility, planning, and the power of delayed gratification. And who knows, maybe they'll be so inspired they'll start questioning their daily $7 coffee habit. We can dream, right? Don't put all your eggs in one basket. The importance of diversification. All right, let's talk about diversification. Now, I'm not talking about diversifying your Netflix queue, although that's important too. I'm talking about diversifying your investments. In plain English, don't put all your eggs in one basket, because if that basket falls, well, you know what happens. Instead, spread your investments across different asset classes, things like stocks, bonds, and even real estate if it fits your goals. Think of it like this. Stocks are like the exciting, high-growth potential friend. Bonds are more like the reliable, stable friend. And real estate? Well, that's the friend with a knack for long-term appreciation. By having a mix of all three, you're creating a more balanced and resilient portfolio. Now, I know what you're thinking. This sounds way too complicated. I don't have time to be a financial expert. And you know what? You don't have to. There are things called target date funds, which automatically adjust your investment mix as you get closer to your goal. It's like having a financial advisor in your back pocket. Just remember, diversification is key. Don't let your teen talk you into putting all your savings into the next big thing, like some trendy cryptocurrency named after a dog. Trust me, I've seen things. So let's recap step 1. Define clear financial goals. Step 2. Start small and take advantage of compound interest. Step 3. Involve your teen in financial decisions to teach them valuable life skills. And step 4. Diversify your investments to protect and grow your wealth. These steps may seem small, but they're the building blocks of a secure financial future. You don't have to get it perfect. You just have to get started. Imagine a future where you're financially secure, your teen understands the value of money, and you're no longer stressed every time you open your bank app. That future starts today. What's one financial habit you'd like to improve? Saving more? Cutting expenses? Or maybe teaching your teen about money? Let me know in the comments. I'd love to hear your thoughts. And remember, save, invest, and protect to build wealth for life. You've got this.